So if it seems like you're paying more for almost everything these days, you probably are. Inflation rose 7% over the past year. That is the highest it's been since 1982. But other economic factors are doing better, including growth and consumer spending. Will that last? Joining us now to talk about that is our financial advisor, Bruce Allen from Bruce G. Allen Investments. He's on Zoom this morning. Good morning, Bruce.
Good morning, Gary.
So, since inflation is in the news, let's start with that. What does the inflation picture look like for the rest of the year?
I think after rising 7%, we're starting to see a slowdown, some evidence that inflation through the course of this year will slow down. And what I'm about to share with you and all these statistics is consensus estimates of a variety of economists. They see inflation slowing from the current 7%, and that will continue to be fairly high this quarter until April. And then we'll start seeing inflation subside, and by the end of the year, we'll be below 3% again.
So when there is inflation, the Federal Reserve usually gets involved. What are they planning to do to fight this, and how could that affect people?
They're going to raise interest rates, Gary. On the short-term, interest rates will be going up between 2 and 4 times. Interest rates, which are currently near 0% right now, will be going up to somewhere between 0.5% to 1% sometime by the end of this year. And that depends on how badly the inflation numbers continue to increase. If they start subsiding like many people expect as interest rates rise, then it's likely that we'll see 2 to 3 interest rate hikes. If inflation is more persistent, we'll probably see 4 interest rate hikes. And many Federal Reserve governors have been talking about this.
Yeah, pretty interesting. All right, as far as the economy goes, how fast do economists on Wall Street think we're going to be growing, or do they think we're going to be growing in 2022?
Yeah, coming out of the pandemic in 2021, the economy was blistering. We saw over 5.5% growth last year. That momentum will continue into 2022, and it looks like we're going to see right around 4% economic growth. These are tremendous numbers, Gary, and we haven't seen this kind of economic growth in a lot of years.
What is driving that economic growth?
3 things. Consumer spending is up, and this year in 2022, it'll be up over 3.5%. Number 2 is industrial production, as companies try to meet the demand for all this consumer spending. Industrial production will be up over 4%. And lastly is the housing market's continuing to be strong. We're going to see new permits and housing starts up as well. So we're seeing this consumer spending spreading out through all over the areas of manufacturing, housing, all sorts of areas of the economy.
And what does that mean for the job market, which has been pretty tight so far?
Dynamite. We'll see we saw over 5 million jobs created last year as the economy really grew dramatically. We're likely to see between 2.5 and 3 million new jobs this year. Those are the current estimates, and that's the consensus. We'll see unemployment get down around 3.5% by the end of the year, Gary, and that's where it was before the pandemic. So we've got a pretty good shot at making up almost all the damage of the pandemic. At least this year will be a good year towards that.
All right, Bruce Allen with the good news and the bad news, I guess. All right, thank you much. Have a good day.
You too.